Hello, how's it going, everyone? LiveVox is going to a SPAC merger with CRSA. And hey, guys, please like and subscribe my channel and give me a thumbs up. And also, we have the free Discord link below. And please feel free to join. And we have a lot of experienced traders in there, and that will help you, start trading and investing in stock markets. Okay, guys. And okay, this merger is, it's going to be a cloud-based company. And as we, have a video talk about cloud-based like APXT before, and cloud-based is one of the sector that you really want to get into. Right now, everything everything is online. E-commerce needs cloud, like cloud services, you know, online, anything online that needs, that pretty much needs cloud businesses. This market is huge, since right now during the pandemic, everybody working from home, everybody ordering, products online, everybody doing pretty much everything online. So cloud-based services is the best time right now to be investing in. And this market is gonna be, it's only gonna, getting bigger and bigger. So this company right here that, is going to a merger with CRSA, and the announcement just happened last week, and it's still sitting at $10.79. So last week, Friday was pretty tough for the SPAC market. So it pushed back to $10.80. So we just, that's, I think, to me, I think that's like a steal, right? Like you risk it. Okay, the SPAC floor is at $10, and before the merger is the floor price, at $10. After the merger, it can go anywhere, whatever they want to go to, right? But before the merger is, the floor price would be at $10. So now you're risking about $8 to whatever. If you're thinking about it's gonna go to like, it shot up to like, actually shot up to like, $12 something, right after the announcement. So you're risking about, 8% to, possibly gonna go to like, 14, 15% after the merger, or even higher, who knows. But let's dive into the the investor presentation. Looks great on the technical analysis, okay? Because you're close to the floor price for the SPAC mergers, stocks. And let's look into the investor presentation and see what we see on, on this company, okay? So this company is compete with FIVN, and they use, so that's pretty much their main, benchmark and comparator, okay? SaaS peers, 840 million valuation on this merger, and their valuation to the, to the estimate revenue on 2021 is 6.5 times, okay? Doesn't look too expensive. Okay, so what they do is like they do cloud-based outbound. So they have a lot of services on like voice outbound and inbound, services, and customer care, and telesales, and AR management, and and all that's, they do a lot of customer based care type of services on, on the cloud base. So they have 121 million estimated revenue for 2021, and they're expecting growth of 25% or higher. So if you want to invest in a company that already have revenue, or or company that, going forward the revenues, you need to looking for something at least 20 to, X amount of percentage growth. You don't want to invest in a single digit growth, okay? So that looks good, in my perspective, that that number looks reasonable. So they have 109 18% net retention, which is great. Over here, just talking about their, like to engage with the customers of their channels choices. So, so this is pretty much all the service that they provide. So their competitors, look at the competitors. So they could be the, they are, right now they are in the startup. Right now they're like, $840 million market cap. You look at, Cisco's and, FIVN and, Nice and all these companies are at like multi-billion-dollar market caps. Okay, so like those are already fully grown company. And do you want to invest in those? For for your long-term investment, yes. But you want to take a little bit more risk on something that the startups like like this CRSA, at 840 million. Why not? I think there's a lot of chance that this guy could be one of those. Let's dive into their financial real quick. So look at their financial rate. So their compound annual growth rate at 26%. Like we say, there's a strong growth for a company like this, and and the margin is at 60, at also 28, 28%. So that looks great. Look at the valuations at at not even $1 billion, and you compare to like nine, five nines at 12.4, and all the ring centrals at 300 the 37.6 billion. So they're relatively cheap compared to all their competitors, which is makes sense, right? Because they're startups and they're not that big yet, right? So, but you want to invest in a company that's like starting from small, and then you want to take that risk, and maybe that one of those days that they would become one of those guys, right? So, so what you guys think, man? In my honest opinion, and a cloud-based company that starting up, and at $10.79 right now at this moment, and for one of the SPAC, and not too many people that look into it yet, because everybody is still in the EV SPAC like space, and like people in that cleaning energy, like clean energy SPAC space right now. And this is one of the SPAC that nobody even pay attention to, unless it, until it hit $15 and people start going to be jumping into it. Okay, guys, but I will let you know that this $10.80 is definitely put it on your watch list. I think it's a great risk reward type of SPAC to be trading. Even swing trade, or I would think is a swing trade would be a best best strategy on this one. Okay, guys, take a look at it and comment below and let me know what you think. Okay, guys, thank you.